Well, Walter, really excited to have you kind of on the show. Just kind of introduce yourself. Tell us, who you are and kind of what your background is.
Gladly. Yes, I am basically a fintech banker for years and years and years, at least professionally, and started Roth Capital, pretty good size regional investment banking company. Started E-Trade's iBank, and then started Acorns, which I guess is how we connected here because we have a pretty popular app out there, and also just did a few other companies along the way. Blast Learn and Earn is one of them. It's in Bloomberg today. And ATM.com is one of our sites too, which your listeners can take a peek at.
Okay. So you've kind of been basically everywhere in terms of like the financial world. Tell us a little bit about like how you got into that. Did you always know that you just liked numbers, finance, like that kind of world, or?
I did. My family was in parts of it, my father and grandfather. And so I kind of grew up learning a lot about the stock market and the way you finance companies. And grandpa had financed Revlon and Culligan and ARA Services, Train Air Conditioning. And then my dad financed a bunch of companies too. I remember he had done the original underwriting for Whammo Manufacturing, which made frisbees and hula hoops and water slides and stuff like this. And that's about when the bell went off. I think I was 11 years old, and I said, "Dad, this is kind of cool. What do you do again?" I actually listened that time, and he told me how he financed companies. So it was just sort of natural to go into it. I didn't go to college. I just worked on the floor of the exchange, through the back office, was a clerk everywhere. And so really the only thing I could do was like a brokerage firm. I really am unqualified for anything else.
Got it. Okay. Well, and just for all of our listeners to know too, it's like most of the people listening to this, they don't have that technical background. Most of them, I feel like, have a specialty in either marketing or sales, or really just have a strong vision. And kind of tell us a little bit about like floor journey and how you started to see that tech was kind of like the direction you needed to be going, because you could have just stayed in the stock stuff, right? You didn't have to kind of get into like the app world.
True. But it also, the financial markets had a lot of resources. So they were really some of the first to adopt tech. I remember we went from, you'd see the quotes on the ticker tape and having to write them down to actually having a Quotron machine. And of course, nowadays you just get that on your phone quickly, easily. We saw a lot of technology come along, but our big success, Acorns, was really my son Jeff, who had just graduated from school, and he was playing with every cool app out there. And he's the one that kind of said, Dad, we could essentially do investing over an app. This was before Robinhood was out, and so that spawned the idea, and then we dug into what it takes to do that.
So in reality, your son was the one that really wanted to bring the technology, and you were just one that brought in the knowledge, is what it really came down to.
Yeah, I knew the industry and, how to start companies, grow companies. We'd financed, really by that point, over 100 companies where we just put up the money or take them public. And so it just, it takes a real team to pull off a successful company. And so, he understood the product market fit, sort of the user needs really well. And I understood the back office and the administrative and financing piece of the equation.
So let's talk about Acorns a little bit for kind of what our listeners don't know. I'd be shocked if anybody doesn't know what Acorns is, but if they don't, I think that they should learn about it. But tell us a little bit about Acorns, how involved you were on the technology side, rather than, did you just mostly fund it? Kind of those directions.
Yeah, I mean, the whole thing, we I conceived of the idea when Jeff was in school. And then when he got out of school, we had it running 3 or 4 months. And then he helped, come on board and really help us develop the whole product and user experience. But yeah, I mean, everything when you're starting a company, we were wondering what to call it. And I knew I wanted it to begin with an A. and I was walking. We have a little property out in the hills here, and there's a lot of oak trees. And so I was just looking down at the ground, and I saw an acorn. And I realized, wow, that thing grew that huge oak tree right there. And when it was kind of set right there, that's what we'd call the company, because that's the whole theme of investing. You're trying to take a small amount of money, grow it into a big amount. And our sort of unique value add was not only making it simple through an app to have an investment account, but also round up the change. We connected a card to it, so anytime you spend with your card, and it could be multiple cards if you wish, we round up the change to the nearest dollar. So you're investing every day, but the amount is so little that it's painless, and yet it really accumulates over time, and so it's helpful. So
Yep.
that was a
So,
concept.
so when you buy a pack of gum for dollar 02, you invest 98 cents every time, right? It's just it's a really smart and painless way. Where did the idea come from when it came to the actual rounding of the change and connecting it to the card?
We had been I've been looking at sort of the near field technology, where you just swipe your phone near the register, and it wasn't quite out yet, but I'd been reading about it, and we were hoping to do that at first, and then we realized, man, if we wait for that technology, we'll never have a company. So we just said, well, let's kind of do the same thing in the background. We'll just have a person effectively hook up their bank account or their card. So when you see the spend, we can round it up and, take it from their bank and put it in the investment account. So we just wanted to create a way that people can invest small amounts every day, because, the power of compounding is absolutely incredible. It's like a miracle.
Yeah. And so kind of like walk us through some of the challenges you had to overcome early, because this is before Robinhood. And I feel like it's been over the last, 4 or 5 years that I feel like the banking and technology stuff has finally caught up and made it accessible for people to more easily create products like this. Obviously, it's still very challenging, but you guys were doing it pre that, right? And so what were some challenges and things that you had to walk through like early on?
Just a ton of challenges. So to be clear, I think we started about the same time as Robinhood, 2012. I think we started in 2012. Neither of us had an app out. I think our app came out first, but we took the two different paths. They're the two most common ways that people invest, and one is that people have a managed account. And, there's trillions of dollars under management right now. You can get a managed account just about anywhere. Or self-directed. Self-directed is, nobody runs your account for you. You have to figure out what stocks you want to buy and sell. It's actually more fun, although the results are worse. People tend to not do as well as the professionals do. And so, we both started up around the same time. I think 2014, we launched in August. For me, the app business was fairly new. It was pretty new back in 2012.
Oh, yeah.
And so finding good engineers that really understood the way we should do this was very key. And we went through some lousy engineers. I kind of got some lousy advice at first before we really figured that part of it out. Then we had to move money. And everything looks a little daunting at first. Some people are saying, well, you need a special license for that. But when you really dig into it, we're using a vendor to do it. And so we don't necessarily need a special license for that, because the vendor is actually the one moving the money. But we had to figure out how to do it and how to keep it safe and, account for it all. Connecting the cards, we were actually close to launching when we heard about this little company called Plaid. And so
a little company called Plaid. Now think out of them.
Yeah. We bumped into the same VC that had backed them, and we happened to be in San Francisco, and they said, well, hey, you should go visit them. This was a person at NEA. And so we went right over there and met the founders of Plaid, and they said, yeah, we're just getting this going, and we'd love Acorns as a customer. It'd be really cool. And it was really essential in hindsight, because it just made the onboarding process much simpler.
Yeah.
That's the key to the whole thing. Make it simple.
So what was Jeff's background in this? Because I know that he kind of brought the idea. Is he technology based or was he kind of business based?
He had a math degree, yeah, from
Okay.
Lewis and Clark. He was
Mhm.
just graduating at the time, and I think we incorporated the company on on Leap Day, February 29th, 2012. We actually only have a birthday every 4 years. And then
Wow.
he graduated, with honors in mathematics that May. But even while he was at college, he was telling us, this feature's cool. This button should go this way. That one should slide this way.
So my question is, Walter, so you have a finance background. Your son has a like a mathematic type background, obviously, but neither of you could write code, it sounds like.
Correct.
So what did you do? So did you just go looking for developers? You guys go look for like a dev shop? Did you try to find people to bring in? Like, how did you guys get it from this is a really cool idea to like, let's actually start writing code?
I don't even think there were many good dev shops at the time.
Yeah.
We did talk to one to kind of help us do a crude prototype. And then we thought, we really want to own the product and be super swift and have a team that's totally dedicated. And so we decided early on we wanted to have our own engineers on board. But you're right, we didn't know it that well. And so at first, we didn't hire the best guys. But we quickly learned after, a couple of guys to give a test. And so I think our test was do the chart screen. The chart screen where you chart just the price movement of a stock during the day or a month or a year or something like that. And we just wanted to see people's different takes on that, And some people couldn't do it at all.
I was going to say that's a very challenging coding challenge to give right off the bat, depending on how you give that. That's awesome.
Yeah, and some did a remarkable, beautiful job beyond what we expected. And obviously, those are the guys we hired.
Yeah.
Yep.
Well, another thing too, Walter, you said that you got some really bad advice from developers, which I feel like we have a lot of listeners who are in the spot where they're trying to get advice. What type of bad advice was given to you, and what did you learn in that process of trying to find developers? One thing that you said is you did a coding challenge, kind of a hard coding challenge. But what type of bad advice did you have, and what advice would you give to our listeners who might be in that same spot? What would you do differently?
It wasn't so much bad advice. It's that we made bad decision, not understanding it well enough, just buying the BS that some engineer gave us and hiring him when he really wasn't that strong. So it was our fault because we should have checked him out more. And so it, cost you a month, which is critical in a startup. And before we discovered it. And then, of course, we realized it's not going the way we expected. And so we talked to some other engineers and finally got some better direction, and the rest is history.
So really how you solved that was bringing on more competent developers is really what it came down to.
And just getting a few more opinions, which is pretty universal advice, right? No matter what field you're in, getting your car fixed or getting an operation on yourself, you want a couple of opinions.
You'd be surprised how often that's looked over. And I feel like that's such a good piece of advice, Walter, that you're giving our listeners is like, don't go with just the first person that tells you. Like if you go talk to a developer and he says it's going to be, $5,000 to build, you should go out and find like 4 or 5 developers and see what they would say. Cause some might say 25, 35, 45, 500,000. Like, I think that the more advice you get, I think the better of a vision you're going to be able to understand.
I strongly agree. Yeah. It's so true. It's good to learn that lesson early because you're going to, end up hiring. We've hired hundreds of people, of course, since that time. Most of them really experienced engineers. Some of them, we took a flyer here and then on a couple of guys that didn't have deep experience. I remember our first head of Android dev, he'd been doing it on the side on his own, but hadn't really worked for anybody. And he built a few cute little things, but no
meat, nothing like good.
Right. Yeah. Nothing, that's out in the marketplace. But he was such a cool guy, Kenneth, and he had this passion for, hiking and photography. And you could just see whatever he put his head into came out beautiful. And so we thought, this guy's going to work as an engineer. And sure enough, he just came out, and he was behind our iOS guy at first, and then he kind of just passed him up. Really
Wow.
turned out a beautiful product.
Picking and finding a developer is probably one of the most challenging things ever. Even now, like I can't even imagine like the difficulties like you went through back in 2012. And that's why I mentioned that thing a little bit earlier. Cause like, again, when you guys were starting, that was pre-Plaid, pre-Stripe, pre-Braintree, like all of these banking institutions that are now out there now to make products like this easier to develop, like weren't there. And so I can imagine 2012 to 2014 was an interesting situation because like I feel like you guys would have had to also solve like a ton of banking problems. Like I feel like you would have had to been working with like those institutes to try and figure out like different integrations and building something there. But I guess in general, from like 2012 to 2014, kind of tell us how much your product evolved over time. Because I'm guessing there was a point where you guys started to get feedback, you guys started to see more things that you didn't like. How did your product change, and what advice would you give to people who are going through like a similar journey?
So yeah, we were doing, user tests pretty much with every feature that we build. And Jeff had hooked up with a really good designer, David, and was coming up with whole new iterations of the design. So I think we probably went through 6 iterations, major iterations before we launched. And meanwhile, the team also was growing, from 3, 4, 5 people right at the beginning to probably 40, 45 people by the time we were ready to launch. And so, quite frankly, I was pretty busy just raising money then, because you kind of have to feed the beast, once you give it a life. And so it was, it's really fun and crazy, and I love building companies from scratch. It's just one of the most exciting things there is.
It's always exciting. Like even here at Strides, like just a simple, from 4 people to 8 people to now like 25 people. It's just wild to see like, I don't know, more and more people there, like pushing like you're basically like your passion, because you start so small as just like this idea on paper, and then it just turns into something crazy. And
So is that your
I'm guess,
underlying business then? You're primarily a dev house, and you're doing this as an outreach sort of thing?
yeah, we're a dev shop, but we have this to
Really
basically
educate.
just teach other people like how to basically find developers and raise funding, which we're gonna kind of get into now too.
Yeah.
How did you like raise funding? Like where did you go? Because even now that's a super hard thing.
Before that, let's jump on. Did you bootstrap it at the beginning? Did you guys just pay for it out of pocket for a while? And at what point did you then say, "Oh boy, we need to get fundraising"? How did you get it from, "Hey, this is a cool idea," to be able to pay developers to build it?
Yeah. Well, we'd started companies before. I certainly had, and sold them out for pretty good prices. And so certainly had, enough to put, $1 million into something, just to, sort of pull the pieces together, because it's hard to tell the story till you have, it's much better to tell it when you have a product to show.
Absolutely.
Yeah, yeah. By the way, I want to say it's cool that you've added this program sort of to your overall company culture thing. It really gets you closer to fast growth companies, see what's going on. You help people, teach people, and it's a little thinking out of the box. So many people are just worried about making the payroll. They don't get creative, and it is through creativity that we get the momentum that helps us get the financing so we can make the payroll.
Well, not only that, but like one of the cool things too, and one of the big things that we kind of focus on is like, for example, Walter, you've already told us tons of really great advice, and then we just take little clippets of it, and we can just turn it into any type of content, and we can put on our LinkedIn, our Facebook, our Instagram, just because like we want to educate the world. Time and time again, Austin and I had just gotten on so many different calls with people that are not ready to talk to developers, right? Or people probably aren't ready to talk to investors. Things that they should do before they even come to a dev shop, or things they should do before they talk to an investor, are kind of like these conversations. And so it sounds like that you had successful businesses that were able to fund the product to get things started. But you said it yourself, once you kind of get things rolling, you really got to feed the beast. And that's when you started the fundraising. So it's funny, I worked for a company that was funded by NAEA, by the way. Canopy Tax was one of them. And so I was part of that group as well. And so it's kind of interesting to hear that you were part of that. But like, tell us that journey. Like, how did you go from, okay, this is where the product is, this is where the product needs to be, and this is what we're going to need to get? How did you secure that?
Yeah. So on that first stage there, it's either the capital of the founders themselves or it's family and friends. And
Hmm.
so pretty much every single company I've been involved in, they do that for their very early round, sort of a pre-seed sort of thing. And then, once you realize, man, I need several $1 million or more to fund this growth, over 12 months or 24 months or 30 months, whatever the number is, put together a great plan, deck, figure out who the logical people are that would understand your industry, and just start dialing for dollars. Figure out a way to get in there, and I think it's a healthy process. It's a little hard to get capital, but starting a business is really hard. So if you can't sort of, make that test, then you probably shouldn't be running a business. So it's a healthy thing. And then, yeah, obviously we started then myself, family, friends, and then sort of small VCs, and then we got larger VCs, and finally, significant private equity sources like TPG and CNBC, Comcast, et cetera.
Raising money and running a business are both hard, but it's funny how you said that, like, running a business is way harder than finding funding, right? And I think back often, Austin and I get pitched all the time. People want us to build their ideas for equity, and we don't even have that conversation because we got to know that the person can run a business first. And so a lot of times we don't even have that conversation. Austin, what do we say? If they can raise $500,000 in friends and family, then we'll have that conversation. Because if they can't at least raise funding, then there's no way they can run a business, right?
Yeah, that's a good point. But I would encourage you. There are going to be some companies where you just see standout entrepreneurs. You really love the idea. You think it's a big market,
Absolutely.
and I'm sure you'll take a flyer with some of those guys, won't you?
Yeah, every time.
Okay. Well, we do that too. We own some buildings, and young companies are often looking for space they can start in, and so we've done it multiple times over the last 25 years, and ended up with some equity stakes in really cool companies. So whether you invest cash or sort of your sweat equity, or you just want to identify those great entrepreneurs with the great ideas and get behind them one way or another.
Yeah, I totally agree. And I think it just comes back to, like, I don't know, when somebody approaches us with a solid, I would say, like, business plan, and I think most importantly, a solid vision, like, we're always open to having those conversations 100% of the time. And so I guess, like, kind of like leading into that, tell us about a time at, like, through this Acorn journey to where you made, like, just a terrible mistake, and, like, what you learned from that. Because our listeners, I feel like, well, just as an entrepreneur in general, like, you're gonna make mistakes every single day. But I think the hardest thing is grasping, like, the knowledge from that mistake. So tell us about a time that you messed up and how you learned from it.
Sure. So it just comes with part of business. It's a trial and error sort of thing.
Yeah.
And I would say most of the mistakes were related to people, hiring the wrong people for the position. That sets you back. And sometimes you can't hire that super fantastic person you'd love because you're just a little small company, and you don't have the resources, or none of the killer candidates are willing to take that chance on you really early on. And so you'll have an intermediate, but that's not so much a mistake. A mistake is, when you think you have the right guy, you're really giving them carte blanche so you can go fast. And the next thing you realize, you've wasted, a couple $100,000 on some marketing campaign that anybody with a little knowledge would have known that that's not the thing to do. So yeah, that's it. Kind of hiring the wrong people would lead to bad investment decisions, capital expenditure decisions. I think those are the big things.
The
We
big
understood the whole
mistakes.
regulatory and back office side and the mechanics there. I think it's really important that people go into businesses they understand, because there's enough
Yeah,
things to
absolutely.
solve. If you don't even know the industry you're in, you should probably wait.
Not be in it.
Yeah, right.
Well, and it's kind of funny. So you talk about like some of your biggest mistakes were hiring the right people. But let's talk about, how do you know when you look at bringing on a team member, how did you pick those people, and what were some of those things that kind of were red flags and green flags for kind of our listeners who might need to bring on a technical person or a marketing, or what do you see? I mean, obviously it's trial and error, but do you have any advice to speak on that?
Well, when you're young, you're growing fast, and so it's not just a central hiring process. Engineers are hiring other engineers, marketing people are hiring other marketing people. Your finance accounting team, they're bringing people on, and so I think when you grow really fast, you can let your guard down, versus you want to try to be really deliberate. For me, I like to meditate, really get to know somebody, make sure it just feels right, look them in the eyes and make sure they're a good person. That's half of it. The other half, you got to make sure they have the skills, of course.
Yeah.
But so, yeah, I would say, just really take your time and tune into how you fit with this person. And, I really think there's some intelligence running the universe. I won't, get into a bunch of philosophy and stuff, but we need all the superpowers we can acquire when we're starting a company and you're creating something out of nothing. You know,
Hmm.
it's almost like a miracle. So you just got to be tuning in and be really deep and get good people that have that same vision that they can walk through walls with you.
Yeah, I totally agree. And I think it's spoken to all the time in, I feel like, podcasts and books, but it's really just like patience and like pondering and really just trying to like understand the team you're building, the culture you're trying to build. So you talk about like you got to this point where you started to grow really quickly, right? Are you able to speak to how you were able to acquire that like rapid user growth? Are you familiar with some of like the marketing tactics that you put in place, or just high level strategy of how you're able to bring on so many people into your product?
Yeah. There's a customer acquisition cost even before you called it CAC. It was just a basic business. What's it cost to get a X amount of revenues from a certain person? And when we very first started the business, I wasn't even aware of how you acquired companies through Facebook, and it was fairly new at the time. But fortunately, our second marketing guy was really good, really strong. He really understood, the direct attribution business, and yeah, we started a pretty significant effort there. We knew what our CAC was. It was very attractive relative to what the ARPU was, average revenues per user, and it was looking like a pretty good lifetime value, although you really don't know at first. But yeah, all those kind of metrics are important to the business, but it's just good common sense. You just want to be able to bring on revenues for more than it costs you to bring them in the door.
That's as simple as that sounds. It's not always the easiest to do, but in reality, it really is. I really kind of want to ask you about how the product changed. Has Acorns always been the same thing from ideation to the actual product that it is today, or did you go through quite a bit of pivots? Did you change things, or has it kind of stayed true?
I think it's changed a lot. While the user on the of the app might not notice it much from their end, other than sort of a new design and a couple new features now and then, the whole back end got stronger. We're very cybersecurity conscious. In the financial services industry, as you can
Oh, you have
imagine.
to be. And I
Yeah.
feel like that would be a huge hurdle in itself, is making sure everything is secure, because it's money and it's
Yes,
other people's money.
absolutely. And
Yeah.
fortunately, your big vendors take care of this to a large degree. So we kind of invented the omnibus clearing solution, and that's how we were able to do fractional shares. Before anybody really was thinking about it. And then, there were actually quite a number of little things there. And to us, we're regulated by the SEC, Securities Exchange Commission, because we have an RIA, the Registered Investment Advisor. It's a robo advisor, of course.
Mm-hmm.
We didn't even know that term when we started, but people started calling
that
it.
wasn't in the roadmap of business, was it?
No, it was just advisor, and of course we're going to use as much automation as we can. So I forgot who coined that term. And then we also have a FINRA subsidiary, which is for the stock side of things, and they had regulations. So really, we were super security conscious because of the regulators early on, and that really made us choose vendors that just totally had their act together. But we still had to, keep rebuilding the business to make it stronger, because there's been so many clever criminals out there with phishing techniques and all sorts of tricks. And so hats off to our team there who seems to keep one step ahead of them.
I was just going to say I worked in fintech as well. So I worked for a company called Divvy. I don't know if you've heard of it, but yeah. So I worked for them for a while, and I remember talking to the head of security. He says that they have anywhere from 5 to 15,000 hacks a day trying to break in and get information. And I can only imagine what like Acorns or Robinhood, like they're even more well known. So that's a lot of respect for your security teams and things you probably didn't even assume were going to happen going into it.
Yeah. And, of course, you're always keeping the customer money, the customer positions sacrosanct. And yeah, people do try to hack, but a good engineering team will keep you ahead of the curve.
Yeah. So kind of in closing, Walter, we kind of always end with like this last question. And it's basically this idea of you had to go back and give yourself personally, a piece of advice. What would that advice be as you were getting started on like your business journeys and ventures?
Trust the force. I truly believe if you have good intentions, you're trying to work with good people, trying to do something good for your customers, the universe almost wants it to succeed versus when you're really screwing up or you're just trying to make a buck and not thinking about the customers. It's almost like the universe conspires against you. So there seems to be some benevolent force working there, and you're going to run into a lot of problems. So you better have that ability to sort of just get beyond them, transcend them a little bit. And then you'll be much calmer, you'll make better decisions, and the business will succeed at a better pace, I think.
Yeah, I love that. I think really just like being the best human you can be, and with a mixture of just grit and optimism. You can only go one direction, and that's forward, right? So I love that.
Absolutely. Yeah. I forget, one of the rappers, I think, said, there ain't no losing. There's just winning and learning. Yeah. If you have a little setback, it's a learning. That's it.
Yeah, that's amazing. So I know we didn't talk much about blast.com or anything like that, but kind of in this last kind of closing here, tell us how the listeners can learn a little bit more about some of the projects you're doing or where to find you, or kind of what's the best way for them to learn more about the projects that you're currently working on.
Yeah, these other projects outside of Acorns, Acorns just about to go public. So it's not much more value that I can add there. I'm better as an early stage guy, I think. But blast.com is sort of has a cool app for gamers where you can invest in the background. We also have an app called learnandearn.com, where kids can earn a little bit of money for taking these little mini courses, learn about a subject, whether it's coding or astronomy or geology or something like that. And that money goes into their investment account, and they get to learn by doing. It starts off where it's all in these index funds, but then pieces they can pick from a pre-selected list, and they can pick Nike and Tesla and whatever it is. And we have robo bumpers on there to make sure they never get a real gutter ball.
Robo bumpers. That's the best phrase I've heard today. Those little robo bumpers. My goodness. So it's like a protected investment for them, right?
It is, yeah. And then what we're doing now is we're embedding the investment function in all apps. And so it kind of gets back to a marketing question. How will people get investment accounts in the future? I don't think it'll be a conscious decision where you say, oh, I'm going to go start investing and download a certain app. I think you're just going to get one in the back of some other app where you happen to have money passing through it. I think that's how it's working in the future. So we're really focused on embedding the investment function in all sorts of different apps. And we've started with the 3 apps I mentioned.
That's awesome. So our listeners need to go out and look at those apps that if they haven't heard of them. I'm on one of the websites. I'm on blast.com right now, and it's already looking awesome. Where can they find them? Learn and Earn? Is that what it's called?
Yeah, that has its own website, and so does atm.com. Check that one out. It's a way you can earn a little bit of money from your data. Again, the money goes into an investment account, and then you decide how you want to invest it.
Okay, so that's atm.com,
Yeah.
blast.com, and earn and learn.
Learn and earn.
Learn and earn.
Learn and earn.
Yeah.
Okay, we'll add those into the show notes. Walter, thank you so much for jumping on. This has been a lot of fun. I actually really enjoyed it. Just kind of hearing the journey and the product market fit being so well and mistakes made and overcome is pretty cool. So Thank you so much for jumping on.
Well, thank you guys, and hats off to you. Keep growing your own business at a super pace. Have fun.
Heck yeah.